Sounds good. Well, my stock pick today is Lynas. It's a rare earths company. And I guess in choosing this company, often when I look at companies, I try and find a catalyst for a move in the share price. My view is that if everything remains the same about the company, its growth profile, what it's expected to see in terms of earnings growth, the share price really shouldn't move. So what moves the share price is new information. And I guess for Lynas, it's geopolitics which is driving the price higher. China produces most of the rare earths in the world, in fact, over 80%. And rare earths are important because they're used in most technological products. So from mobile phones, electric vehicles, even in the use of processing jet fuel. So the Western world needs rare earths. They are a highly strategic asset. And given the US-China trade wars, we've seen Lynas' share price being well supported. Not only that, aside from that, they have a strong growth roadmap. So that includes a plan to around about double the output of its main products. So it's got a growth plan as well. And then add into the mix Wesfarmers sniffing around, being interested in taking over this company. The indicative bid from Wesfarmers, which is non-binding, which means it might not go through, is at $2.25. And certainly at that price, it will not go through, given that the share price is much higher than that. So I guess the factors that are driving Lynas are the US-China trade wars, the possibility that China might restrict rare earths to the rest of the globe. So it is a highly strategic asset. And in fact, Bryce, we've seen this before. Back in 2016, China restricted rare earths, and we saw the price of rare earths moving to more than 160 US a kilo. Now,
Wow.
at the moment, we've seen the price move from about $32 a kilo in US dollar terms last month to about $42 at the moment. So we have seen a strong rise, but I think as this trade war continues on, more and more technology companies are going to be thinking about the security of their supply.
Right. So what you're saying in terms of the trade war is that if China restricts their rare earth minerals to the States, then the States are going to be needing to find an alternative seller of rare earths, and this is where Lynas comes into it.
I think there are a few scenarios here. One, the worst case scenario for technology companies is if China restricts the export of rare earths from China to the rest of the globe, and that will mean that they will be scrambling for supply. Lynas is the only non-China rare earth producer of any scale, so that's pretty amazing in itself. But secondly, it means that at the moment, if I was a technology company, gaining access to this resource through China might not seem like the best long-term plan. I might want to diversify being able to secure rare earths from outside of China as well. So regardless of whether or not China restricts rare earth, I think that the security of supply is very much in focus, which is good for Lynas and good for securing longer-term contracts at these higher prices. And then thirdly, because the security of this asset outside of China is once again in focus, rare earths are actually not rare. You can find them anywhere throughout the globe.
False advertising.
But they do require some specialist knowledge in order to mostly process these rare earths, because they do contain highly toxic waste materials. So there's another, I think, area of growth for Lynas in that if it wants to help other companies in processing or mining rare earth, then its expertise could open up another avenue of growth. Production of rare earths from the US is Mountain Pass. There's only a very small amount of rare earth which is mined, and the concentrate's actually shipped to China for downstream processing where a lot of the toxic waste occurs. And in May, China lifted the tariff on that deal from 10% to 25%. So US technology companies are probably already feeling a little bit of pain, but given that it's such a strategic asset, this is a key time for Lynas. The share price has risen quite strongly. It's been the best performer in the ASX 200 over the last quarter. I think we're going to see a little bit of consolidation here. The next key dates to be aware of in terms of the US-China trade is the 29th of June, when the US and China are supposed to meet up at the G20. And of course, if we don't see constructive conversations going on there, we could see once again a bump up for Lynas.
So on that point, you mentioned right at the start that you look for catalysts of change. If the China-US trade war threats, I guess, come to a head, or I suppose they come to an agreement on the 29th and for some reason start going the other way and relaxing, would this then make you reconsider your position on Lynas?
It depends on the share price action. Definitely when I'm looking at stocks that I love and I can see catalysts for and the thesis changes, then my risk management is always in place. So I have a percentage stop loss on the positions I hold. So if they fall more than a certain percentage from the highs that they've reached, then I'm automatically out of the trade. And that's to stop my emotion from getting the better of me when I'm looking at the share market. Because for me, I love stocks. It's very easy for me to fall in love with stories. But at the end of the day, I hate losing money. So risk management is key. But I think, look, I don't think it's just the US-China trade talks which are underpinning this story. There's also Wesfarmers circling around with a possible increase in terms of its takeover bid. And also, given that rare earths already in the spotlight, I think, if I was Lynas, I'd find it much easier to sell my product to the rest of the globe, even post-US-China, because it is about security of supply. And if you only have one source of supply for rare earths, that is China, this event really demonstrates the risk to your business if you're a technology business from just getting that supply from China. So, if I was looking at this situation and I was a technology company, I'd be looking to diversify my supply. And really, the only option out of China to any scale is Lynas at the moment.
Speaking of supply, and I want to touch on Wesfarmers as well, but does Lynas only have, I guess, major operations in Australia, or do they have mines for this sort of stuff in other countries as well?
This is mined in Australia and then it's sent over to Malaysia for processing. And that's one of the key risks with Lynas. It's been in the media before in terms of Malaysia. And I guess to Malaysians, it's quite unpopular that Lynas has its processing plant in Malaysia, given the concerns sometimes about the waste material that comes from processing rare earths. So they mine the rare earths over in Western Australia and then they ship it out to Malaysia for processing. Now, their agreement with the Malaysian government is up for renewal on the 2nd of September. And that's a major risk for a company like Lynas. However, recently we did see comments from the Malaysian Prime Minister and he acknowledged the importance of the strategic asset that Lynas mines and the security needed, and basically indicated to the market that he would be giving the go-ahead for Lynas to continue processing that material out of Malaysia.
Would you say that Lynas has a pretty strong moat when it comes to its business model at the moment in Australia?
I think it's a temporary moat. With all commodities, the time to look at jumping out of commodities is when you see a massive supply response. So it's in this great spot at the moment where the rest of the world just simply hasn't caught up to what's happening. But as I mentioned, rare earths aren't rare, so it's only a matter of time before projects start not only popping up, but we start to see more rare earths being processed. So with commodity type companies, I like to look at it through the supply-demand lens. And I guess an example of this really is lithium and lithium carbonate prices. We saw a strong run up and they were some of the strongest performers on our market a number of years ago. But then you saw SQM, which was one of the largest producers of lithium carbonate in the world. And then since then, it's been very difficult to make money from lithium type of companies because the underlying price has been under pressure. So general rule of thumb for commodities is that it's not that hard to mine commodities. It does take a bit of time and some expertise, but generally when you start to see that big supply response, it's time to start thinking about perhaps getting out of those type of companies.
Now I want to...
How about you, Bryce?
No, I've got one more question.
Oh, okay.
Why is it that you don't... I mean, you just said that rare earth... its minerals aren't that rare. Why is it that you don't think some of the bigger mineral exploration and mining companies in Australia, BHP, Rio, aren't as heavily involved in this?
Look, I think rare earths, it's seen this boom over the last few years because of technology really dominating our lives. And if you think about it, this has been like the last decade where we've seen this gain in popularity. And to tell you the truth, prices had been relatively depressed before the US-China trade war came along. And that's because, China produces rare earths quite cheaply and it's willing to take on some of the dirty work of processing as well. So I guess in terms of incentives, there was little incentive to do so. But I think the current scenario has highlighted the strategic nature of rare earths, especially given the rising geopolitical risks throughout the globe and specifically between the US and China. So look, I think the situation is unique at the moment, and we probably didn't have that catalyst for miners like BHP, Rio Tinto, maybe even Fortescue to diversify into these areas.
Interesting. Another question before we move on to mine, if you don't mind. So you mentioned that the Wesfarmers deal is hanging around, and they made a bid, and was it either knocked back or they pulled out? I'm not quite sure, but what does it mean for an investor? Say if you're invested in Lynas, what does it actually mean? Is it a good thing? Is it something to be wary of when someone like Wesfarmers comes in and makes an offer for one of the companies you may be invested in?
Well, I think it's a very positive signal. Obviously, at $2.25, it's not going to be successful given that Lynas' share price closed at $2.75 today. But it does demonstrate, I guess, the attractiveness of the business. If you think about Wesfarmers, it's got a very strong track record in buying undervalued companies and then adding value to those companies. It's done that with a number of different investments. So obviously, the potential it sees in Lynas is quite positive. I think Wesfarmers also thinks it can bring its own expertise to the table in helping Lynas and in terms of the processing part of the equation. And it's been quite an unusual interest in Lynas that Wesfarmers has in that it's caused Lynas a few problems with the Malaysian government as well, because it does look like Wesfarmers has been relatively activist and engaged in talks with the Malaysian governments, which has traditionally been a bit of a no-no given that, Wesfarmers doesn't own Lynas as yet.
So when you were looking at this, and you're looking at a mining company as well, I guess this applies a bit more broadly to mining, but do you look at less about sort of the catalyst for change and the broader picture and take any note towards their financial position at all?
The financial position is important, but I guess given that Lynas has laid out its growth plans, it's also very easy to find out what its plans are. So it did lay out that growth roadmap, so that plan to almost roughly double output. Now, usually when you hear something like that, first of all, I think, well, that's going to cost money. And I guess in terms of that growth roadmap, part of it was a self-funded $500 million capital spending plan. Wow. So that gives you a bit of security that the business is able to fund that growth themselves rather than coming to the market, which is, I think, a positive sign for investors that they don't have to dig into their pockets all the time to fund this type of growth. So yeah, I like the Lynas story. As with all commodities, I keep a close eye on the supply-demand dynamics. At the moment, it's the supply side or the potential disruption in supply from China, which is driving a lot of the price. But look, its growth plans are strong. And look, we know that over the next 10 years that our use of technology is going to continue to boom, especially in the area of electric vehicles. So while at the moment there's plenty of supply of rare earths, if you include China's supply, over the next 10 years, that relationship is likely to maybe reverse, especially as electric vehicle momentum starts to take hold.
Yeah, completely agree. I think when I first saw that Lynas was your pick, it's a company that I hadn't really paid much attention to. I knew it was performing well from a price point of view, but I always tend to keep a bit of a distance from mining companies just because I think the volatility and the cyclical nature of it, of the companies, is something that I don't stay close enough to, and you can really come unstuck if you don't really know what you're looking for in some instances. But I mean, I think for all the reasons that you've mentioned, it's certainly a company that I'm going to keep an eye on, just if anything, to get a bit more of an understanding about the industry and these rare earth minerals. So awesome.